All right. Hello, everyone. Welcome to another session of ExpoLab Blockchain Speaker Series. Today is my great pleasure to have Kevin from Gitcoin joining us, and he's going to talk about the ecosystem that he has founded to help the blockchain developer to thrive and survive in this very exciting and, I guess, pretty competitive field as well too. So, without further ado, Kevin, please take it away.
Thanks so much for having me, Mo. It's great to be here. Hi, everyone. I'm Kevin Owocki. I am the founder of Gitcoin. And Gitcoin's mission is to grow into... There we go. Let me just make sure my son's okay. Yeah, everything's fine. Okay. I'm the founder of Gitcoin. Our mission is to grow and sustain open source software. And basically, open source software is a foundational pillar of our digital ecosystem. It creates $500 billion per year in economic value. And we want to help find business models for open source software developers. So show of hands, has anyone in the group used open source software? Couple of you. It's really just a pulse check, because if you're studying computer science, then you're probably using open source software. Open source software is, I think, in a really amazing development, because when you walk into a hackathon, I'm in the Ethereum space, but this really applies to any modern software development. You have all these amazing tools out of the box that you can use to have these, you have these Legos that you can assemble in order to start a project. And whenever I start a project, I don't write a new database server. I don't write a new web server. I use open source software for those things. And I just have this deep affinity for the fact that all of this code, this $500 billion worth of economic value in code, is all available for free on GitHub and SourceForge and GitLab. And I think it's a really amazing thing to live in this world where all of this code is available for free as a public good. It didn't have to be this way. I don't know if this is an undergraduate course or not, but if so, y'all are probably in your early 20s. I'm 35, and I remember back like developing on the Microsoft stack. I think that, like, there's a possible counterfactual version of the world where open source did not take over, and we're all developing on our Windows PCs and our Windows phone. And in terms of blockchain, maybe we'd all be using like our Clippy coins or something like that. Um, and so I'm just super thankful for open source software. And when the Ethereum community was blown up in 2017, I started Gitcoin, which our mission is to create business models for open source software, which hopefully will allow anyone to work for the open internet. And basically, we want to build a world in which everyone has the leverage, to financial leverage, to leave their job and work on open source software. And so, that was how we got started. We have delivered about $8 million worth of funding for open source software in the last 24 months, basically. I started the company way back here in 2017. And you can see that as we've gotten more and more momentum, we've had more and more impact on the world. And, there are people who work on the Gitcoin network full time now, which I'm super proud to say has been a goal of ours, is to change people's lives, to enable people to work for the open internet has been our mission. And so the that's sort of the why of why we created Gitcoin. And in the basic insight here, I think, is that um, I was around when the internet was created, and the internet of information allowed computers to send information across a network as a primitive, like without, you could send information across the network without an intermediary. So like if you're the New York Times and you have this like printing press and distribution mechanism, all of a sudden you're on an even footing with a blogger, because now the internet allows you to send information across this network. And that changed everything about our society that relies on information. It changed our entertainment. It changed our politics. It changed the way we get our news. And I think it's like really amazing to think about how the internet has changed our lives because of that core primitive ability to send information over across a computer network with TCP IP and UDP. And I'm like an elder millennial. I was around before the internet. Like I remember having a dial-up modem, and so like I remember before the internet sort of like took over the world. And one of the things that really inspires me about working on the blockchain space is now we can have a computer network that sends the core primitive of financial value across a network without an intermediary. So basically, what in society relies on information? Entertainment, media, news relies on information, and all of those industries were upended by the internet. What in the world relies on financial value? Investments, banking, finance, jobs, all rely on the core primitive of financial value. And so, what is the allegory? We're 30 years into the internet of information right now. We're like maybe 10 years into the internet of finance. Is the internet of finance going to upend everything that relies on financial value the same way the internet of information upended the internet of like the all of the things that rely on information? And so I think that that's the opportunity ahead. And a lot of the blockchain space right now is DeFi and like financial investments, and I think all that stuff is cool. Like I have investments, I'm 35, like I have a 401k and all that kind of stuff. You guys will have 401ks also one day. But the thing that like my bet, my like from first principles bet, is that speculation in finance is just like one of the first use cases, and the internet of jobs is going to be a really huge thing because jobs rely on financial value. And if you want to take blockchain to the mainstream, most people's financial life is not investments and speculation, like what DeFi and the Ethereum community is now. It's their jobs. And so I want to build a jobs network, and I want to, I'm a software engineer. You couldn't tell my beard and my long hair and my just general software engineeringness. I want to make a better world for other software engineers because because like those are my people. I've been in the trenches at 4 different startups together with other software engineers, but also because software engineers are the tip of the spear for the internet of jobs. We're the type of people who are going to figure out MetaMask and private key management and transaction ID broadcasts and all that kind of stuff. And so I think that we're going to be the first ones to adopt the internet of jobs. And so I think that Gitcoin is kind of like the tip of the spear for the internet of jobs in a lot of ways. I mean, there's other amazing projects that are doing community job stuff also, but Gitcoin is sort of one of the first and one of the biggest. And so I'll stop there to like take a breath, or if there's any questions or comments. And if not, I'll sort of continue on into talking about our journey and I think what's interesting. And Mo, if you want to sort of steer me towards what you think the students are learning this semester or anything like that, feel free to as well.
No, this is great. And again, these two talk is kind of the broader scope. So far, we've been really focusing on the protocol and the particular Ethereum, Bitcoin, Hyperledger specific platform, but now just kind of seeing how does these different systems are used in the bigger picture. So I think that's exactly the intent. And perhaps maybe one thing you can also allude to is that what other application do you see becoming prominent in going beyond just the DeFi and some of the current use cases? And how does the general workforce can really get into this, as you mentioned? So I think that example of that would be really appreciated as well.
For sure. Yeah. Excited to go there. So the basic, like, what other use cases of blockchain are going to be big? I'm going to go back to my sort of parallel with the internet of information here and talk about how many people in the group use Google? Show of hands. Also a pulse check, just making sure you're paying attention. How many people in the group use yahoo.com? All right. So basically Yahoo, I don't know if y'all have followed, basically, I'm trying to remember that some people in this group might be Gen Z, and I'm an elder millennial. And I remember the early internet because I'm an elder millennial. And one of the things that Yahoo did when they were like, Yahoo's mission was to classify information and make it indexable. Google's Google's mission was also to classify information and make it accessible and reachable. But they took two different routes to the same goal. Yahoo took the card catalog system of a library and put it online. So if you wanted to look for the Colorado Rockies, the baseball team, you would have had to go to yahoo.com, select sports, baseball, major league, Colorado, and then you would find Rockies, right? You had to navigate the taxonomy of information that existed before the internet. And what Google did is they just invented the search box. Just type in Colorado Rockies and we'll give you the most relevant information related to the Colorado Rockies. So what Google did was they reimagined how to index information leveraging the technology of the internet in a way that had never, ever been done before. And Google kind of ate Yahoo's lunch because of that. They created a fundamentally easier way to access information. And so this is obviously, it's obvious with the gift of hindsight. Hindsight is 2020. Obviously, it'd be easier to search for something than navigate a taxonomy. And so, Mo, when you ask me, like what's going to be the next thing in DeFi and blockchain, like I can kind of take that allegory forward, which is like, of course, there will be like internet banks and there will be internet jobs. But what's the fundamentally new primitive of things that you can do with tokenization, with blockchain, with smart contracts that just like are really great ideas, but haven't been proven out because the internet of money is so new. And one of the things that I always try to do when I'm trying to reason about this is reason forward from first principles about what is going to have value and what is going to happen. So like we've got these core building blocks, we've got blockchain networks, we've got smart contracts, we've got tokens. How do you assemble these core primitives in a way that provides more value than what existed before? And so I think that like that's one of the things that I learned when I first started doing startups is that you can like when you're building a startup, you can always copy what someone has done before you. But if you can learn to think for yourself, if you can learn to think from first principles about how the world is changing and how to sense make, then I think that you're in a much better place a bit like as an entrepreneur trying to figure out what to build. And so I know that's not a direct answer to your question, Mo, of what's next. But if you're looking for a direct answer, I think the internet of jobs and community jobs and the ability to invest in each other is what I'm really excited. That's the design space that I'm really excited to learn about. Gitcoin runs an accelerator called Kernel. Kernel is not unlike a Techstars or a Y Combinator. And there's software developers and entrepreneurs that are not unlike yourselves that are going through it right now. And one of the things we're exploring is, hey, what if everyone in the kernel class had upside in everyone else's project? So basically, like, what if you could take 1% of everyone else in your class's company or project and like put it into a token and everyone could participate in the upside of everyone else? And so that would change the incentives of your class and of your cohort to like support each other more. I'll support other people in my class and my cohort just for the good vibes. Like I live in Boulder, Colorado, for gosh sakes. You guys are in California, so you know the good vibes I'm talking about. But having that economic incentive, I think, is an example of something that is even stronger because of the blockchain space. So I don't know if that answers your question, Mo. I'll pause to take another break, and if not, I'll kind of get into more of the stuff we're working on.
No, I think gives a hint, which is I think that's all we need, I guess. Yeah, please go on to the next.
Yeah, definitely. And I just want to do a quick time check. I know you said about 20 minutes, and I'm realizing it's half past the hour. So do I have like 5 or 10 more minutes, or should I wrap up?
So till 1:35, so another 6 minutes.
Cool. Sounds good. Well, I'd love to talk. Well, I'd love to leave some time for Q&A. So if people have questions or comments, feel free to unmute and chime in. And if not, then I'll kind of go into some of the stuff that Gitcoin's working on right now. Okay. So basically, Gitcoin has a campaign going on right now called Gitcoin Grants, and basically what it is a crypto Patreon. So like you can post a project and raise money for a project that you're working on in the blockchain open source ecosystem. And basically this is gitcoin.co/grants. And basically what Gitcoin Grants is like a fundraising platform for blockchain projects to be able to raise money. And I'm just going to look at the infrastructure category of Gitcoin Grants right now and show you some of the Ethereum infrastructure projects that you can contribute to using Gitcoin Grants. So basically, this is DApp node. They are infrastructure for, I think, staking. And basically, the idea here is that we host a crowdfunding contribution platform for this Ethereum ecosystem, and you can add it to your cart here, and then contribute to blockchain-based projects using blockchain, which is I think an example of using the core primitive of blockchain, dog fooding the Ethereum ecosystem. And sort of like the gimmick behind Gitcoin Grants is the fact that we run these matching rounds every quarter. So basically, this grant has raised 649 DAI, which is worth about $650. And it's going to create and right now the estimated match for this Gitcoin grant is around $3,000. And what's cool about Gitcoin Grants as a matching platform is that it leverages something called Quadratic Funding. And using Quadratic Funding, a one DAI contribution to this grant could equal $90 in matching from the matching pool. And so Quadratic Funding is basically the mathematically optimal way to fund projects in a democratic way. And the secret behind Quadratic Funding is the math. So basically what you do is you raise a matching fund of Gitcoin Grants has raised a $500,000 matching fund that we're distributing right now. And basically you distribute it according to the Quadratic Funding formula. And what's really cool about Quadratic Funding is that it optimizes for the number of contributors funding a project more so than the amount that they're giving to a project. So basically, in this example, I'm using this calculator that Gitcoin created called WTFisQF.com. And in this example, Grant 1 raises $10 from 10 contributors, and Grant 2 raises $10 from 1 contributor. And you can see that Grant 1 gets way more of the matching of the 500K matching pool. And the reason why this is powerful is that when it comes to funding infrastructure projects, the number of contributors matters more than the amount funded. And this pushes power to the edges away from whales and other central power brokers, which creates more democracy in public goods funding decisions. And so, our mission is to grow and sustain open source software. Open source software is a public good. And I think that one of the reasons why it works is that we've got this incentive built into Quadratic Funding where if a grant is democratically popular, a very small contribution can equal a very big matching amount. And that's cool. Like, it's great to contribute $1 and have $100 worth of impact. Like, who wouldn't want to do that? And so Quadratic Funding is an example of something that I think wouldn't have existed in the 90s when I'm growing up, but I could see it being a core primitive of how we fund our infrastructure in the 21st century. So Mo, when you ask me what's next, what's an example of the use case of blockchain, Quadratic Funding is one of the things that I'm really, really excited about. And it's one of the reasons why Gitcoin has become a success, is Quadratic Funding. So that's what I'm excited about right now. I'm trying to put more Quadratic Funding in more places. And we're just kind of building tools to make Quadratic Funding go more mainstream and get bigger. In the Ethereum community, we're distributing $500,000 per quarter to Ethereum projects. And the consistency of doing that is key. So if you're in the Ethereum space and you're building open source software, there will be a Gitcoin grants round in Q1 2021, Q2 2021, Q3 2021. And being able to just work, our mission is to enable you to work for the open internet. Every quarter, there will be a Gitcoin grants round. And if your community enjoys what you're doing, then you can raise money from Gitcoin grants. So that consistency, I think is a really, really key thing. And it's something that we're trying to do to enable people to work for the open internet. So I see that I only have 2 minutes left. Would love to get into discussion and Q&A. Go ahead, Mo.
Yeah, that's very exciting. So just since we're talking about blockchain and there's always attacks and identity is an issue, so
Yeah.
how do you kind of prevent, for example, I want to spend $10, but then I create 10 fake identity and I do it on behalf of 10 contributor. Is that could be a potential issue?
Yeah, absolutely an issue. And I think that I would never oversell what Gitcoin Grants is doing as having solved the identity problem. Decentralized identity is a huge deal, and basically my philosophy on it is that if you look at it from a certain angle, Gitcoin Grants is actually a red team blue team exercise for battle testing digitally native Sybil resistance technology. So Sybil resistance is basically sock puppets resistance. Like, how do you prevent people from making up identities? And how do we do that in a digitally native way that doesn't require KYC or like government IDs and stuff like that? And so like Vitalik chimed into my tweet here and said, crypto as a whole is kind of a giant red team, blue team exercise for battle testing, a more peaceful and defense-centric version of cybersecurity. So basically, Gitcoin Grants has not solved this problem yet. But my goal as the administrator of Gitcoin Grants is to solve it in parallel with how much money we're raising. So like when we first started Gitcoin Grants, we had 25K matching rounds and we hadn't really solved Sybil resistance. And now we're doing 500K matching rounds and we have a more serious approach to Sybil resistance. And when we're doing $5 million matching rounds, we're going to be really, really good at Sybil resistance. And so if you go to your Gitcoin profile, which you all should sign up for Gitcoin, you can go to your trust bonus tab and you can see that basically what we're doing is we're integrating with all of these DID providers, from Bright ID to POEP to Twitter to Idena. There's all these other great like digital identity providers. And when you integrate your Gitcoin Grants profile with them, you get this thing called a trust bonus, which is basically like a bonus for verifying your identity. And so this is our way of kind of like incentivizing the blue team in that red team blue team exercise to prevent the red team from being able to attack us. And so Mo, the answer to your question is that we have not solved digital identity, but we're just going to do it in an iterative way and get better every Gitcoin Grants round. Great question.
Sounds good. Thank you so much. I mean, yeah, of course, that's one of the hardest problems. So,
yeah.
So any other question before we kind of transition to our next speaker? I wish we had a little bit more time, but
yeah, no worries. You can find me on Twitter. That's like the easiest way to get a hold of me if you have questions or you just want to nerd out about open source or software or the future of the internet. That's me. I just put myself into the Zoom chat. But Mo, thanks so much for having me. It's been a really great pleasure to speak to your class. And I wish you all luck in starting your careers in software development. It feels like yesterday that I was a computer science student and learning about all this stuff. And I think there's a bright future for software engineers across the world. And I hope to see you out there building something cool.
All right, thank you so much. We really appreciate that, and I'm probably going to fill up an application. We all need grants, so thank you for introducing it to us. And I'm pretty sure maybe some of the students, especially who are building an application on top of Ethereum, they may start filing a grant as well too. So thank you. On behalf of ExpoLab and Davis, thank you so much.
All right, bye Mo. Thanks for having me.
Thank you. All right, so our next speaker is Sherman from Polychain Capital. So now he's going to talk about, he's a portfolio manager. So he's going to again continue talking about the investment and how do they, I guess, find the right technology or the right application to put their money on. So please take it away.
Great, thanks. And you can hear me now? Is that good? Cool. So I have a deck that I made. Let me actually share my screen one moment. I'll refer to it, but it's quite a bit. I think Mo sent out the link as well. It's a lot of text. It's kind of stuff I scrapped together. It's kind of ecosystem type stuff, but also about our fund. But at a pretty basic level, So I work at Polychain. We're one of quite a few crypto funds globally. Our fund itself is split into kind of like a multi-strategy fund. So it's not just investing in liquid coins. We have one core fund that is our hedge fund. That's buying and selling like cryptocurrencies as you know them, Bitcoin, Ethereum, stuff like that trades out in the market. But then also we have a more holistic approach around it where we invest kind of across the entire spectrum. So we actually have everything from an incubator that incubates companies from like a founder and just kind of an idea that we help them out to develop, through to venture where we actually invest in both equity and coins of companies that are, again, like seed stage, early stage companies. And then again, those kind of mature and actually go out into the liquid markets. And that's kind of where our the hedge fund takes place. But then also we have an internal engineering team. So I think a lot of people in the space don't follow this quite as much, but staking and participation in these networks, I think like Kevin was kind of getting onto that, but governance is a pretty big topic, and we run the biggest like internal capital staking operation, I think pretty much of anyone that's out there. So we actually stake coins and take pretty activist stances within networks and changes that go on within networks, and help them kind of bootstrap the governance when they come out. Networks like Tezos and Cosmos, Atoms, and Polkadot, and networks that are using staking. But so let me go. So that's kind of a quick overview. So on the investment thesis, kind of generic stuff, but it's basically, we believe that it's what Kevin had touched on, which is with crypto you can do things that you can't do with with current like incumbent technologies and things like that out there. When you actually place this equity-like commodity or ownership-like feature within different bits of software, you can transmit value, and you can do it and open up activities and incentives that you usually couldn't do before. The thing that we actually talk about internally, because we've invested in this term called like DeFi for like a long time, or a long time in crypto at least, which is like 2-3 years now. But being able to interact with people and move value without having to rely on a centralized source, that basically opens you up to, again, like possibilities you couldn't have before. And now we're kind of seeing them with DeFi kind of thriving a little bit more, right? You can get credit, you can move around assets to have different distribution within new networks, right? But the gist of it is that before, like the term is like software is like eating the world or whatever, but now it's like markets and money will eat the world, because you can open up liquidity anywhere without bounds. And that's kind of what we've seen happen within DeFi, is like this initial stage of just like sprouting of activities where we've just never seen that. And within the different companies we invest in, we've tried to at least plant those seeds to allow for this. So we've invested in companies like Compound and DYDX and MakerDAO and pretty early primitives of what you call DeFi. But basically the idea is that with smart contracts, you can do things that you otherwise couldn't. And this opens up the possibility for investment where you otherwise couldn't. We like really don't believe in permission technologies or enterprise blockchains or anywhere where you have an incremental step above what's out there currently. Enterprise blockchains are basically the whole idea, the whole reason this movement is happening is because you have some equity layer, which is the coin or the token in it, that gives incentives where you can't get them otherwise. We've heard this whole term, this whole like, I don't know what you call it, like FUD type thing, which is like, oh, it's all about blockchain, not Bitcoin. The reason Bitcoin and cryptocurrencies work is because you have this unit of account, which is this coin that weaves in and out and is kind of the blood of this operation. If you have some network like R3 or any of these kinds, they've all fizzled out for a reason. And I've followed these companies. I've been in the space for quite a while. So, we believe that the investment is actually at the coin level. So with a team, this is kind of generic stuff, but basically we combine pretty technical, understanding of the different technologies. So like I mentioned within our engineering team, a lot of these guys are security. They're they're pretty heavy on security engineering. A lot of them came from Coinbase or built out the early primitives of some of the trading engines and staking technologies that you've seen. And then we get pretty deep into the deal flow. So like the people like you guys that are coming out and actually coming out with cool projects, we want to fund because we want this industry to move on. And without like the primitives I mentioned, without the early funding in DeFi, MakerDAO and Compound, like none of this stuff could have even happened. And it's just been really awesome to see it sprout. So so really identifying founders with good ideas early on that are just novel, that you just can't do, and that we can actually see growing. We want those to get off the ground. But then also at the base layer too, when we invest in these different protocols, there's some thematic elements we actually look for. So like this kind of meta chain concept, which is rather than having your own blockchain, you actually have this kind of interoperability that kind of stems at a core layer chain, which is like a Polkadot. And you actually run your own consensus mechanisms from that in this form of interoperability, where you have all these like quote unquote meta chains that interact together, but based on the security of that base layer, which is like something like Polkadot. And then like programming, right? Different forms of programmability, and being able to execute different types of smart contracts in different languages, something WebAssembly like WASM, like we've invested in Dfinity, which is an upcoming project in the next quarter or so. That's going to be coming out. And then like storage, right? I think Kevin had mentioned this, but the current forms of contribution within the community are basically altruistic, right? Like you go on, you want to seed out different sorts of like BitTorrent, right? There's no actual reason for you to be giving up your risk for actually giving out this content and helping spread that to other people, right? People are incentivized by money. The strongest networks will have the strongest economic incentives. And like digital storage is one place we like haven't seen really any sort of change in that. And we think that Filecoin and networks like that will be kind of disruption there. And then also privacy and heavy cryptography. We have a network coming out called Aleo. But like looking at all the different forms of privacy that are out there, we think that'll also be big. So hitting on these kind of thematic opportunities.
Wait, what is WASM again? My bad.
WASM, WebAssembly. Here.
Okay.
Is that good? Yeah. And then within ventures, so most of the early iterations of crypto, it's a lot of, I know Mo touched on identity, but like a lot of it is speculation related. It's trading, but it's legitimate activity, right? You're moving value around. There's going to be tons of companies that pop up that have to do with this. So we've invested in a lot of those. So a lot of trading infrastructure, trading technology. Anchorage is one that's actually pretty unique on the left side, which is infrastructure, which is custody. I came from the equities world, so I used to trade stocks and options. And you don't have to worry about people like stealing your shares of Apple. You're not keeping them under your bed. But in this space, like people could take our assets. They were targeted probably, pretty often. And so companies like Anchorage are interesting where they actually purely specialize in just custodying assets. And it's funny because now we're actually seeing incumbent banks and financial services firms like Goldman Sachs and JP Morgan come out and they're like, we actually need a good way for people to store their crypto. And they're actually eyeing companies like Anchorage heavily, where there's not really that many that are like Anchorage. Fidelity's getting into custody as well. So we think this is a pretty big space, just custody of assets. And along with that, being able to participate in this governance that I mentioned earlier, which is like staking with that custody, right? Because you're giving up those rights if the custodian doesn't support it. But places like Anchorage, places like Coinbase Custody, these guys support that. And then Frontier Technologies here on the right. So again, like I mentioned, just new products that are uniquely enabled to do new things with smart contracts. I think Gauntlet is one that's interesting. Maybe I can highlight that in the middle. In DeFi, you have value flowing many different places, and the bounds to the capital and the restraints that you can have tons of leverage, but it's all defined on chain, right? But we still don't have really good ways of modeling out risk. So Gauntlet actually models out risk across all of these different open source networks. And that's actually gonna be very important as you layer on these different sorts of unique risk, right? Where, in 2013, you could barely borrow Bitcoin to short it. Now you can actually borrow, with derivatives, you can do a bunch of different things, and you can layer on derivatives on top of those derivatives. And so you need some way to be able to assess on the networks, how much risk there is and what the kind of chain reaction could be. So places like Gauntlet are just coming out with supportive tools to assess risk. This is not our chart, but like I found it, I thought it was pretty cool. The gist is like looking at our portfolio, right? What kind of sectors within crypto do we actually invest in? DeFi, but then also custody, research and development, like I mentioned, Gauntlet, some gaming, although we're not as heavy on that, but privacy is a big one, and trading infrastructure and technologies, as well as broad-based protocol layer infrastructure. So just to give you an idea of kind of, what are some of the sectors that we look at broadly, because it's not just random coins. It's, we think of it in different kinds of sectors. And this is
Would
like
you guys
us.
say that you guys focus on specific sectors and that kind of like a specific sector more heavily, or?
That's a good question. I think that, actually, let me go back to this. I think anywhere where we see a big enough market that currently you cannot do with the current technology, not just like, oh, putting Apple shares on the blockchain. That doesn't mean anything, but just like flash loans, right? You're at least in the next 5 years, you will not be able to get a block by block frequency loan on in equities from interactive brokers to go and short something before it's even available. That kind of arbitrage and that kind of opportunities, you cannot do that in central markets. They just can't do that. In crypto, you can. So like that might be something like trading, technology, and infrastructure within DeFi. We focus a lot in that area because I find that a lot of the opportunities that you can't get in normal markets are within this new DeFi space. Whereas trading and exchanges, like, yeah, those are kind of becoming saturated, right? Maybe we'll focus a little bit less on that. But I think within DeFi broadly, there's the most opportunity, right? Markets, just the actual size of the markets that you have, because we're only talking about like crypto trading, but you look at normal markets, debt trading and currency trading trade multiples above stock trading. And stock is just like what you see at the tip of the iceberg, right? Because that's like the fun stuff. But then debt and the deeper types of supporting infrastructure are huge. And those are the biggest places for crypto to actually get into and disrupt. And within DeFi broadly, I would say, as a result, those kinds of disruptive opportunities are probably the biggest. And then the opportunities to actually invest into the coins themselves in those networks. Yeah, so this one's kind of breaking out. You can kind of see by different firms. They're not all investing in the same types of stuff, right? CMT Digital, is a trading shop themselves from Chicago. They're doing a lot of exchange investing, things like that. Our other is mostly DeFi, generally, as well as like wallets and basically supportive infrastructure, right? Because crypto is not that friendly for normal people to use. You need to have good infrastructure to use it. We think that investing in a lot of the more friendly kind of front ends for people to get into crypto with are pretty promising. Let me check. This is just DeFi ecosystem on Ethereum, but just kind of looking at the different sectors as well. Prediction markets, credit and lending, like I mentioned, stable coins, right? Being able to put stable dollars on an actual chain like Ethereum and be able to interact there. That's something we didn't have like 5-6 years ago, but now we actually do. I think a big one is actually this one up here, which is DAOs. So DAOs are an interesting concept. I think, again, the previous speaker, Kevin, spoke on this, but the biggest thing that we see is that when you change incentives in these networks based on the coin, you actually change the possibilities of the networks. And currently, I think the analogy that we usually use is like Uber. Uber is a corporation that is completely separated from their drivers, right? Uber chugs along as a corporation. Its driver gets some discretionary payment. They have some idea of the pay they're going to get per ride, but it's not real time. A lot of it's subjective, and it's not directly connected to the effort that they actually put in. And so the actual prosperity of the entire network of Uber is not going to the driver. It's going to the Uber corporation, the shareholders there. We think that in the future, shareholders and workers on the network that actually provide value, those are going to merge. And these DAOs are kind of the best early primitive of that, where you have this kind of like collective group where users and contributors to the platform actually own pieces of the network in this coin that accrue value as the network grows. So in my mind, if you were to flip Uber around and make it actually more like aligned far, far better, in real time as the driver is driving, he will see the value of this Uber coin or whatever he's getting accrued to him. Uber itself, the corporation, it's not really going to be a corporation. It's going to be this kind of giant DAO where it autonomously pays out holders of that coin. How do you get the coin? You provide work and you actually go on there. Then people like me that want to use Uber, I actually pay the fee happily, and it incentivizes more people to come in if there's some proper value accrual to the coin. It's very, very different in the current system we have. This is why you need like some sort of coin going to work. That's why Bitcoin miners mine Bitcoin. They don't do it for fun. They do it because there's a dollar value attached to it. And then they provide security to the network, right? It's the same kind of concept with these DAOs in a way where, again, users become owners. It's not the other way around where they're separated. So I think that's a pretty big one. Segmentation's kind of the same thing, just showing you a percentage, but a lot of the early, most projects are within exchanges and liquidity, right? That's just basic market infrastructure that we need to develop as we go on. So DeFi, this is a little bit out of context. I put this a little bit later, but yeah, like January 2017, we bought MakerDAO coin in kind of what was considered, I think, the first like ICO, which was just Olaf, who founded Polychain, like messaging them and be like, hey, can I buy some of these coins off you? Yeah. And so that was pretty early on. And then we seeded a couple companies, Dharma, DYDX, which do like early DeFi trading. Same with Compound. And then it kind of picked up, right? But planting these seeds was pretty important to get us to where we are now, which, sorry, I have this thing. Currently in DeFi, this number's gone up a lot, but there's about, I think like $14 billion locked in smart contracts. This is, I think, 7% of the Ethereum circulating supply is now locked up in these smart contracts, participating in the ecosystem. And the retention is pretty good. When a lot of people come in, the money stays in and it gets kind of recirculated, rehypothecated, it gets lent out, and the money kind of stays in there. And now you have outlets like Coinbase and places like that allowing people to convert their dollar to stablecoin and go and lend it. Preferably, you know, they want it on their own exchange, but on DeFi, you get pretty good yield. And I think a lot of that's contributed to this rise in this kind of total value locked figure we've seen and overall prosperity within DeFi. Yes, a blockchain investment. I don't have 2020, but the number's gone up a lot. But this is just in the US, just dollars coming in. I can say that for you guys, when you're graduating, like, there's a lot of demand for just blockchain engineers broadly. If you have a good idea that hasn't been done, that's approached in a different way, the amount of capital, like the one like the capital we manage, it's just hungry to go into places that haven't been looked at before. And big institutions like endowment funds, sovereign wealth funds, a lot of family offices and individually wealthy investors are just putting in little bits of money to just get some exposure to the space. Because like I said, it's just, you're doing stuff that you couldn't ever do before. And the reaction that people have to this, like the markets, you know, you've seen the valuations of these different networks have gone up quite a bit. So the amount of money actually coming in to allocate to those new projects is pretty substantial. So it's pretty exciting for you guys that are looking to develop within the space. Blockchain ecosystem. Now it's showing like hedge funds and maybe this one's not as relevant. Let me see this one. Digital asset infrastructure. Yeah, not as much. So that's a little bit about, I guess I'm done with the deck, but that's a little bit about kind of what we do. I can dive into anything. I know that the investment side is a little bit different than probably the technical side. But I can go into anything that you guys would like. So please just, if you have any questions, or Mo, if you'd like to ask anything, I can go into anything more. But that's it at a high level.
All right, thank you so much. That's very insightful. So I guess I'll start with a few questions. So in this course, we study both permission and permissionless. And you alluded to that from the funding perspective, especially from Polychain, the focus is really on the permissionless side of things. And that's where you see the opportunity. So I think kind of from a technical standpoint, let's help us to kind of step back and give a little bit more insight as why is that the case. And to kind of set that stage is that at the most basic level, we have a ledger, and this ledger is both democratic and decentralized in both in both the permission and the permissionless setting. But then there's also a notion of the crypto asset or the coin itself, which of course it's I mean, it could be realized in both permission and permissionless setting as well, but more prominently in the permissionless one. And then finally, it's the notion of identity. And in the permission setting, well, that's kind of a centralized identity for the most part. But in the permissionless is a decentralized identity. So now looking at the application space and sort of seeing this, I guess, the revolution of new application that the blockchain allows, maybe if you could give us some insight, why is the permission setting cannot be a player in this game?
Yeah, sure. I mean, I kind of mentioned a little bit on it, and you guys are far more technical on the inner workings. But again, I've kind of been in it for a long time. I've seen a lot of these projects, probably since 2013. I've seen the early iterations of enterprise type blockchains, and they've all moved. They basically most of them have moved to coins, and it's because at the end of the day. And I've pushed hard on a lot of these companies because I was like, am I dumb looking at this initially? Where why would I actually support this network with my resources? Why would I support it if I'm not getting anything in return? And there's your incentives as a human. If those incentives aren't aligned, which we think the best way is actually some sort of equity in the network, there's no incentive to actually secure it. And I actually still haven't seen any form of a network that's actually used. I've waited since 2013 when R3 came out, JP Morgan's initial chain. I pushed hard, even Ripple, all these guys. I basically pushed to see how are your incentives aligned? Why would I actually want to participate in it? Because when we actually stake on these networks, when we actually own the coins, our incentives are aligned with the users of the network and the outcome of the network. We actually think about the governance decisions that go into the networks because we own a lot of the coin. We don't want it to do poorly. We want people to use the network. We want them to actually pull and buy the coin to actually pay for the resources to use the contracts and to develop on it. But when you have some network that is kind of just a close group of people that don't really have monetary incentive to actually secure it, the whole purpose of this entire like blockchain movement is you have this ledger that you can't go back in time and just rewrite. If there's a reason the Bitcoin network is so strong and robust now, and it's not because there was no coin initially, it's because there's this coin. And the miners, by virtue of the value of that coin going up, is kind of reflexively given them more resources to actually secure this network more. And now it costs a lot to actually go back and rewrite that ledger. I have not seen that on any sort of permission chain to date. Like I would feel much more comfortable doing something on Ethereum or Bitcoin where it's hard. It's genuinely expensive to go back and rewrite it, rather than some chain that has no economic incentive for its participants. And I think a counter argument that I've heard, time and time again is, well, the security on like Bitcoin or Ethereum, it's mostly Chinese miners. Yeah, but if they go and wreck the network and do anything that's bad for the network, the value of the proceeds that they gain, that they actually use to pay off their equipment and run the operation becomes less. They have no incentive to actually wreck the network. You don't have that same incentive with networks that don't have any economic benefit. So at a very basic level, it's tying economics in the proper places. We've actually seen that happen in DeFi pretty nicely, where new participants are rewarded in different kinds of ways that actually draw capital in where we haven't really seen that before. And naturally, it's actually tied together in a more natural way. But now you're actually getting into governance and things like that. So
that's a very interesting. Yeah. So that's, I mean, I kind of understand where you're coming from now. So, but kind of let's break that in two steps. One is the notion of introducing a form of a coin. And so a permission setting like Hyperledger or Ripple or the other ones you mentioned could potentially introduce a coin. And with the perception of the market that coin will have any value, would have some value, and this coin could eventually make this network self-sufficient in terms of its monetary value and its sustenance. So that's a possibility. But what the other thing that you mentioned, which I think is probably more fundamental, is the resiliency of this chain. Since the construction of the chain is inexpensive in comparison to the construction of the Bitcoin or the Ethereum, rewriting the history becomes much easier. So then are we kind of now saying that that's the most important aspect? So it's not that so much is the coin, because, well, we could just have some other form of a coin that doesn't require mining and it's cheaper, but then this is the kind of the deal breaker, or this is the key fundamental attributes of the permissionless setting.
Yeah, sure. Well, I guess once you actually have a coin, we're like experimenting with different forms of actual governance and participation in security, right? Where Bitcoin mining, the miners don't even own the coins, so the actual users and the coin miners who actually provide the security are kind of separated. Now we have like these staking models which are experimenting a little bit differently, merging the user and the actual security of the network with the owner. But without it, I think like it also, when I've spoken with people in the industry too, because I've spoken with the JP Morgan type people who've actually been really known for pretty early iterations of this, they're smart people. I think this is their first kind of compromising step into the space. I think it's kind of like an intranet. It's a very early iteration and an early step into this, because these corporations that have pretty critical data, like banks, they can't move on to Ethereum like that, you know? I think from what I've gathered, it seems to be their kind of introductory step where they're actually not so much, you're right, they're not so hard on the security, but other forms of being flexible with the code and things like this, it benefits them a lot more, where they actually place more priority on that, getting used to that component, where they're actually taking this kind of baby step out of their centralized systems into this kind of like midway portion. And people like me that are looking at the security the hardest, it's not feasible for these big corporations. So I think I perceive that to be kind of this like intermediary step. I don't think that they're dumb or looking at it the wrong way. I think that this is the slower necessary step that they need. They're not, you know, reckless with it. So I think it's like an introductory step for them, where it's, again, like an intranet versus like an actual public internet. It's kind of like a closed end step for them to like get involved and become familiar with the different networks. Yeah.
Well, we definitely have seen the share of controversy is that folks, speakers said permissionless is the only way, and we had folks who said permission is the only one, is the reality is the permission, everything else is not up to the reality. So I think I think it remains to be an interesting interesting space to continue to explore. I mean, ourselves, we kind of really focus on the permission side of things, but more and more I do see that the resiliency that you mentioned as a fundamental property that one cannot or with difficulty can recreate in a permissionless setting. Maybe one last question. So what's your feel in terms of the investment on the proof of stake? So I think it's easier to, I mean, it doesn't have that resiliency of the sort of the Bitcoin, but it tend to be more efficient in terms of its energy usage and its performance.
Mm-hmm. I think that when you combine the actual security provider, resource provider, and the actual user and the coin itself, and combine them, whereas again, like I mentioned, Bitcoin doesn't. It just, I mean, speaking as someone who actually, we do participate pretty heavily in the governance on staking networks, it does change the way that we look at it. I look at pretty much every vote that we propose, and it's always in the best interest of the user and the owner, because we are the biggest. But I think it does have its own share of problems as well, because it introduces different components where maybe not technically, but like economically, most of the supply could actually be removed from the ecosystem, right? So for you to actually go out and buy it, it becomes a little bit more difficult, right? And like different parts like that, it does have its own kind of set of drawbacks. Whereas within Bitcoin mining, it's a little bit different when you're separated. But I think it aligns the incentives a lot better from what we've seen. In terms of investment, we're mostly looking at just networks that introduce different, better ways for developers to actually come on and use the network. I think Tezos is an interesting one where the governance, it was really the first staking blockchain. Fascinatingly enough, though, we haven't seen quite as much like development on it as you'd think. And so opening up the tools to actually have developers come on and build things, that's also pretty important, where even if you have the base layer governance down, or at least in a little bit of a better way than we've seen before, it still doesn't matter. You still need developers to come on, have more flexible programming, things like this, that will actually allow the ecosystem to kind of thrive. So it's not always better, like in terms of the actual connection of the incentives, like I mentioned, and the governance, but yeah, I think it aligns it better than what we've seen with Bitcoin and Ethereum. And Ethereum is now moving to staking. We'll kind of see how that goes, because a lot of the network is mining. The whole network is mining right now. But yeah, they're actually now locking up their coins with very little economic incentive to kind of signal support for this new network, which is called ETH2. And Ethereum is the one that currently has the biggest ecosystem on it. So it's kind of like changing out an engine while the car is running. So we'll kind of see how it goes. But yeah.
All right. Thank you so much. So I'd like to take this opportunity on behalf of ExpoLab and UC Davis to thank you for joining us today and giving this very insightful talk. So thank you.